Good morning, friends. This is Nishant Patnaik, Associate Editor, Cafe Mutual. Today we have with us Manish Gunwani, who is CIO Equity at Nippon India Mutual Fund. Manish brings with him rich fund management experience and an excellent track record of wealth creation for investors. So let's move on. Welcome, Manish.
Hi.
Yeah. So let's start the interview. Manish, I'll start with a question which is on everyone's mind today. And Manish, we understand that you have been in the fund management industry for the last 20 years, right? So, and you must have seen many market cycles so far. So, how do you read the current COVID-19 situation and its impact on equity funds in the near to medium term? Over to you, Manish.
So while we have seen a lot of cycles, every cycle seems to be different. So COVID is something of a shock which we haven't seen in the last 20, 25 years in the sense that it is coming from the health side. Typically, the crisis we have seen is something like the financial crisis in 2008 or the tech bust in 2000. So there were different types of big market moving events. The COVID thing, I think, is also different not only from the event perspective, but also from the kind of policy response we've seen, especially in the US and Europe, in terms of the monetary and the fiscal stimulus that has been given. It is probably looks like to be one of the sharpest movements in the market, where market moved down a lot in March, but partially because of the stimulus, it has come down quite significantly. So it's a very interesting time for the markets. I think India, the good part is anyway, even before the crisis, the equity returns had not been too high because the economy itself was since 2018 going through a slowdown. So a lot of stocks today in the mid and small cap space are still 50, 60, 70% down from the peak of Jan 2018. So my view is that while this crisis will have a big impact on the economy, there is enough value in the markets if we are patient, because the good part about this crisis is beyond a point it cannot stretch. So whatever impact it will have on the economy, both on the global side and on the domestic side, it will be for a certain limited period of time. Now, whether it is 3 months, 6 months, 9 months is anyone's guess. But when you invest in equities, typically we take a 3-4 year view at least. And if you have that kind of view, then this is something which has delayed your earnings, but it has not denied the earnings, I think, because the fundamental drivers of the economy don't change with an event like this. So overall, I think while the headline index has rebounded and may not offer supernormal return on a 2-3 year basis, there are a lot of mid, small, and even large caps, which on 3 years.
So, Manish, talking about your fund, which is Nippon India Growth Fund, which has almost completed 25 years, right? So, congratulations on that front, sir.
Thank you.
And Manish, we would like to understand the journey of the fund so far. I mean, how it has evolved, what changes have been incorporated in the fund over the years, and what is new in the fund.
So I think, as you correctly pointed out, this is a fund with a long history. Clearly, in the decade of 2000, it was a stellar fund with a great performance. Uh, but I think we have to split the history till the SEBI changes, which happened in 2018. But I think the structure of the fund obviously has changed a lot because once the SEBI categorization happened, we have classified this as a mid-cap fund, where more than 65% has to be in the mid-cap space as defined by SEBI. So the way we look at this fund today is that obviously we want to make it one of the best mid-cap funds in the industry. And we feel that we should beat the mid-cap index by a healthy 4, 5, 6, 7% consistently. So that is our objective, to run it as a consistent performer in the mid-cap category space. Now, this fund has the flexibility of 35% being outside mid-cap. So the way we think about this fund today is that it should have the best 40 to 50 stocks across the stock market. So out of that 40 to 50, 30, 35 will have to be from the mid cap, because we need to be 65% at least in the mid cap. But in that 40 to 50, we can capture the best stocks in the large cap space and the best stocks in the small cap space as well. So typically we try to have 1 to 3% in these 50 stocks, which make up most of the fund.
Okay. So Manish, Nippon India, Growth Fund has created a meaningful wealth for its investors, right? So I would like to understand that what are the three things that have contributed to this performance?
So I think one very important contributor to this fund's return over the 25-year journey is that earlier when we were Reliance Mutual Fund and today when we are Nippon Mutual Fund, I think our research in the overall stock market, but especially in mid and small cap space, the ability to identify small companies within 5-10 years can become big. So there are a lot of stocks we've held in pharma or industrials, which have become 10-20 bagger over the last 10 years. So I think as a research team, traditionally we have had a lot of focus on identifying these small companies which can become big over a period of time. The second is that this fund traditionally, as I mentioned before, has the ability to straddle market cap, straddle sectors, and take bets across the stock market. And while today mid cap is the dominant part, we still have that flexibility. So we have not been very constrained in terms of identifying or being sector specific, etc. So we've had a rich universe to play in. And third is, I think there has been good ability to not be in overvalued stocks across different cycles. So there is a bit of, you may call it contrarian thinking or some reality check on valuations. So we've not typically taken big positions in very frothy bubble type valuations, which has helped the fund perform over the long term.
Manish, the last 5 years has been very challenging for the fund in terms of performance. So how do you plan to revive the performance of the fund?
So I think over last 2-3 years, we have steadily revived the fund. Now it is in the mid cap space on a 3-year basis. It is stacking up quite well in performance. I think you cannot look at 5 years today because, as I said, there was an important change in the fund positioning at the point when the SEBI recategorization happened. So you have to look at the performance since June 2018, because that is when the fund became a mid-cap fund. So I think we are moving in the right direction of making it more consistent. And last 3-4 years, typically in every year, we have remained in quartile 1 or quartile 2 most of the time. So we hope to continue in the same direction. And as I said, over time, our effort is that it should be one of the best, consistent, and good alpha generating fund in the mid cap space.
Manish, take us through the stock selection process of the Nippon India Growth Fund.
So our base style is growth oriented. So typically we look at four verticals where typically high growth companies come from. Basically, financials, consumer discretionary, healthcare, and technology or export driven companies. We feel that a lot of the 5-10 year growth stories come from these sectors. And then, of course, you try to combine that with a great management and hopefully enter at good valuations. That is the core recipe of good mid-cap investing, I feel. Um, Again, in terms of tenure, if you see most of our top 10, 15 holdings, obviously you tend to be with these companies for a long period of time, although the weights may move up and down. Also, we keep the fact that liquidity is a very important criterion in mid and small cap investing. So we have a lot of robust rules of risk management in place. For example, we don't start with a position of more than 5% in a stock because beyond that, obviously, it can become very illiquid. Also, based on our internal risk rating, we have a lot of constraints in terms of lower rated stocks. What can it be as a part of the fund? So we have a lot of systems in place today to help us in the portfolio construction. And clearly, we feel that with those kind of with that kind of risk management and our the real success will lie in our research. And we feel that we have a very comprehensive, experienced research team, which will help us pick up the right stocks across the sectors.
Okay. So, okay. So Manish, there are 150 stocks in the mid cap basket. So do you think, I mean, this basket is enough for you?
So obviously versus the entire, let's say BSE 500, it is restricted. And the challenge, of course, is the liquidity is also not very, very high in some of these names because they are MNCs or where, let's say, government has a big stake. So 78, 65, 70, 75% is with the promoter in a lot of cases. But overall, I think that since we have to be only 65% in that space and 35%, there is flexibility. There is a bit of constraint, but it is not a very big constraint.
So Nippon India Growth Fund has increased its exposure in pharma, auto, and non-durable. So Manish, why do you think these sectors have turned, I mean, lucrative in the recent past?
So one of the common themes across these sectors is the balance sheets are very good. This combined with the facts that since 2016 we've had events like demonetization, GST, etc., is that the market share of the leader in an industry or top one or two players, there is a good chance that their market share may go up because the smaller companies need access to funding from NBFCs or PSU banks. They have a lot of dealings in cash. Their ability to withstand the slowdown or the lockdown which we've seen will make them invest less in capacity expansion, brands, distribution, in getting talent. So overall, we feel the developments over last 3-4 years in general and specifically with this COVID thing, we want to be in balance sheets which are very strong. So one is generally in these sectors, we are finding that the balance sheets are among the best. Second is most of these sectors have gone through a down cycle. So auto, the volume growth has been very limited for 2-3 years. Pharma since 2015 to 2019 has been in a downturn. So the valuations have come down to levels where they're attractive and earnings expectations are not very high. Now, pharma has run up over last 6 months. So maybe that margin of safety is no longer there. But auto and some of the other consumer names today, we feel that on a 2-3 year basis, after this fall in COVID, there's fair amount of margin of.
So how is Nippon India Growth Fund different from other mid-cap funds in the market?
So in terms of overall structure, frankly, we can't be different because everyone will need to have that 65% plus in that 150 mid-cap stocks. But what we are trying to do is, as I said, have a good combination of stock picking, which is the core, uh, combined with good risk management and backed by a very solid research team across sectors, so that we have the best ideas from across market cap, across sectors, across styles of investing. So hopefully using this kind of mix, we should be able to deliver best of breed performance in terms of alpha creation in the mid cap category.
Okay. And one last question for you, Manish. Why do you think distributors should recommend Nippon India Growth Fund?
So I think it's a great fund because you have a lot of flexibility. So as I said, core is mid cap, but you also have the ability to toggle between large cap and small cap with the rest 35. So effectively, the entire stock market is your universe. Second is, I believe that in a growing country like India, you will have multiple opportunities where a lot of small companies will become mid cap and a lot of mid cap companies will become large cap. And over time, even in a developed country like US, we have seen that long-term data, when you look at it, small cap and mid cap outperform the headline index, which is S&P there, Nifty for us. So given the opportunities in a growing market, we feel that small and mid cap index should over long term outperform Nifty. And if we outperform mid caps index, which is our objective, then I think overall it should deliver in absolute terms one of the best fund returns in the entire industry.
Okay. So what is the way forward? I mean, lump sum or staggered manner in mid-cap investment? What do you suggest?
So today, clearly, after a fairly decent run-up, the immediate upside, I think, is limited in the market, but that is more at the headline index level. As I said, I see a lot of mid and small cap companies which on 3 year can give very good return. So I think the overall allocation to equities should broadly be staggered from here. But in terms of lump sum, maybe people can move a bit of money from large cap funds to mid cap or multi cap fund, because I think the broader market is still cheap. So I think the broader market will on 2-3 year basis outperform the large cap index.
Yes, please.
See, a lot will depend on the trajectory of the virus, that if the number of deaths go up, and we are already seeing in pockets that lockdown is again being imposed in specific areas or cities. So I think the only big risk at this point is if we get a major revival in the cases and deaths of the COVID thing, and the vaccine doesn't come, then a lot of areas will have to be shut down. But I think the probability is quite low. Apart from that, I don't see too much of a big risk.
Thank you so much, Manish, for your valuable time
Thank
and input.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.